G'day traders, Stacey Burke from Stacey Burke Trading, Tuesday, May 19th. Daily currency levels for the British pound crosses. Looking at today's economic news calendar, we have the GBP claimant count change at 2 a.m. New York Eastern Standard Time. Tentatively all day we have the G7 meetings, and then tomorrow morning New York, 10 a.m. Eastern Standard Time, Federal Chairman Powell testifies. Yesterday, a fairly large ranging day on a few of the pairs. Looking at our pound Aussie first, I've got the Canadian up there. Pound Aussie first. Daily chart, we can see yesterday stops were taken out on Monday from back in January, and we've extended that range now below the 87.50 level, and just currently sitting above stops from December at the 86.50 level, and then further down from there in the lower part of that 250 pip box, we have stops sitting at the 85.46 level. Again, this market fell fairly strongly yesterday. When we look at a 4-hour chart, we can see that market opened on a gap before engulfing and trading sideways before continuing that move down below the 87.50 level in a 1-2-3, consolidating and currently sitting just above those stops, again below the low of the week and further down below the 86.50 level. Looking at our 15-minute chart, we can see that yesterday again we were in a 50 pip box. The market stayed in that range for the Europe-London changeover before hitting short stops above the 87.50 level, the 8800 level, before dropping down and then consolidating in US session and then continuing that move down. Today's session, we have already, in the Asian session, taken out yesterday's low, pulled back above the 86.75 level, and traded sideways underneath the US session swing high below the 87.25 mark and above the 86.75. So median price is around that 8700 level. We could see some price action come off of that level. We've just taken some smaller stops out, and we have stops again below the swing lows at the 86.80 level. And if the market were to break out of this box again, we're in a 50 pip box, so the market could break down, possibly stop hunt the shorts from the most recent swing and resume that downward movement, taking out the lows down at 86.50. If this market was to find some support inside that peak formation, we could see a retest of the high, possibly a breakout and a continuation through those swing highs, retesting the breakout from last night's US session. Again, currently we're inside of this 50 pip box, and 8700 is our median price. Next up is our pound Canadian. Again, another market that dropped down yesterday before pulling back in resuming a sideways movement. You can see we had an engulfment yesterday of the bull candle from that first part of the session, and then a reversal, pin bar reversal engulfment. And the measured move, if this market was to continue to move down, our first possible area of resistance is around that 69.25 or support. And if it was to continue for a measured move, 68.50 could still be a reasonable target. Now, if this market pulls back inside of that engulfment, we could get a retest of the high up at 7100. And again, looking at the daily, we can see that this market had a fairly large fall yesterday. 7,000 level is the big numbers. We could have a 1, 2, 3, and actually it is possible if this market was to pull back and then take these lows out, we could have a measured move, possibly extending us down to that 67.50 level. Currently on our 15-minute chart, we can see again yesterday that market worked at 50 pip stop hunt, hitting the stops from the US session swing highs on Friday night, and then pulling back, pinning the high one more time and dropping down, consolidating, currently sideways underneath of that box from yesterday. And again, briefly taking out the 7,000 level before pushing up in Asia, 1 push, 2 push, and currently possibly having a third test of the high. So this 70.25 area could be important. We could have another hit to the high and a retest. And again, we have stops, swing low stops higher up just from this morning's changeover session. And again, if this market was to break higher and find support above there, we could get a retest back through the stops from the US session at 70.75. But currently we got 1 push, 2 push, and we're heading into the Europe Open London. We could get a 1, 2, 3 into the London Open and possibly a retest of these lows and back to the low of the day. And again, we talked about the possibility of an extension of that move down to 69.25 if it was to fall, and the next target at 68.50. Next up is our pound Swiss. Again, yesterday we took out stops from last month and pulled back before consolidating. We're sitting currently just at that level where the breakout occurred, and we talked about a measured move yesterday of that descending triangle, that peak and trough, and we've met that first expansion. If the market was to stay inside of this, we could get a retest back towards that 1900, 1950 level. If this market was to take out the low of yesterday, we could get a resume of that expansion range down to 1640-ish and possibly even down to 1500. But again, this market has hit that first expansion and pulled back off of the 1750 level, and we could be getting a retest of that 1900, 2000 level in the box if it was to take out yesterday's high. When we look at our 4-hour chart, we can see this a bit clearer. The micro trend line's been broken. I'll just blow this up a bit, and that breakout pullback has now failed, but we are testing the original breakout of that range from last few weeks, and we had a creeping trend down, a trend line break. We could still get a retest of this low. This area around the 1875 level is obviously critical. We've pinned it already and consolidated, so again, depending on how this market handles the next couple of sessions, will give us some insight if we're going to roll back down for a retest or possibly head above to, we'll just put some markers on there for the stops, retest some of the swing stops from Thursday and Friday, just above in that 1915 region. Again, yesterday, a fairly strong fall, 1, 2, 3 down, consolidation, and a 1, 2, 3 pin to the high up. So again, we could just see this market, how it retests and handles the high and low of the day. Looking at our pound daily, this market had a big move down on Friday, and yesterday a fairly strong run up right from the start of the session, a breakout pullback continuation, and we're still consolidated inside of this descending trend line. We have stops below yesterday's low or at the 129.25 level, and we're trading briefly around the round numbers at 130,000. Again, similar to the pound Swiss, this market had a strong run down and is pulled back. It's still inside of this descending trend line. Again, this next few hours will give us some insight if we're going to have a revisit down to the breakout from yesterday or a breakout through yesterday's highs and Friday's highs to retest the swing highs from last week. We have stops above the 131.90 level. Obviously, we have stops above yesterday's highs at the 131.30 level. And of course, yesterday's lows down at 129.28. When we look at our 15-minute chart, we can see again this market has hit the stops up top, come back, hit the stops on traders that were long, worked itself inside of a 50 pip box between 31.25 and 30.75 and is currently trading sideways at 130.100. And again, this median price area, we've got traders that are short from the pin bar up top and traders that are long from the pin bar off the bottom. So in the next hour or so, we should see one of these sides get hit on a stop hunt, either to the high or to the low. And again, depending on how this market handles that, we could get a stop hunt low back for a retest to the high, or a 1, 2, 3 to the high, taking stops out, come back down for a stop hunt down low to resume that move up. So we could see them work the high first. If they are heading up, work the high, work the low, and then continue that move. If they were to work the high, jam in 1, 2, 3 and shift, we could see a test back through today's lows and the swing lows from the US session. Next up is our pound New Zealand. And again, this pair, again, we talked about the 3 pins, and then it's moved strongly down yesterday after briefly retesting the highs at 25 to 50 pip stop hunt up high, and then rolling down and then trading down in the US session. We have stops below the lows of last week at 2.0120. And again, if the market was to take these lows out, we could revisit the 2000 level and possibly even some of the stops below there at 1.9885. When we look at our 4-hour chart, again, we can see we're not too far off from taking out the stops. We've had one full expansion of that breakout from the upper rectangle. A second full expansion would take us down possibly towards the 2000 level and 1.9975. And again, we could see if this bull candle is taken out in the next session or two, we could have a measured move of that candle alone, which gives us approximately 120 pips below here to the 2000 level. Again, sort of in line with our another X full range expansion. We have stops from previous months just underneath this week's ranges, down around the 2030 level and 1.9940 level. When we look at our 15-minute chart, just blow this up. Again, we can see the market briefly had a stop on high before consolidating and dropping down, and then dropping down again in the US session, extending the move into the open of Asia, consolidating, hitting the stops. We have a bit of a micro M pattern already in place on the pound New Zealand, so we could have a peak formation in place depending on how this Europe-London open transitions. We could either have hits the stops up top for a move back down. This market has already dropped down and is pulling back. It is possible we could work off of the 175 level for a continuation down for a second full expansion of that move to 2.0100. If the market was to break that, we almost have clear sailing down to the 2.0000 level. Again, currently we are just taking out the stops at the low of the day. We're going to just briefly lower that again. We've broken out of the 50 pip box from 175 to 225, currently trading underneath of that. So we've had a breakout and possibly a little bit of a pullback again in the Europe-London Open. We may get a pullback into the 175 for a continuation back down. So we've already broken down in the box. We could retest the stops just above the 196 level, 2.0196, and then retest the swing low currently in place for a measured move down. If the market was to break above the 2.0200 level, we could certainly retest the high of the day and pop back up above that 2225 level. And lastly, our British pound. Again, looking at our daily chart, we had a breakdown pin hammer last week, dropping down, consolidating underneath of the low of last month and pulling back yesterday. If this market was to continue to respect this falling trend line, we could get a measured move of yesterday's range. And again, the original breakout, we had a swing high low. The measured move, we've done one full expansion of that. A second full expansion would take us down approximately to the 1860 level. If this market was to, again, just extend the range of yesterday on a follow-through, that could even take us down approximately to the 1750 area. So again, currently, until this trend line is broken, this market is still heading down. When we look at our 15-minute chart, we can see that the market has consolidated currently inside of a 25 pip box. Currently, we're trading inside of a 50 pip box between 22.25 and 21.75, the median price being 2200. You can see just on the news, the market's just come off of that level. They've broke down briefly before consolidating sideways, pinning the low, and then now moving up possibly for 25 pip stop hunt as we watch this live. Depending on how it handles the high of this 25 pip box, we could hit yesterday's high, triggering stops, or break out and pull back from continuation, break out sideways, continuation, or hit the stops, pull back, hit them a second time, and reverse to retest the swing lows down below 21.85, and of course the lows of the day below 21.75 and last night's U.S. session lows. Just again ending on a quote by Richard Dennis: focus on whether what you are doing is right, not on the random nature of any single trade's outcome. Mark Douglas talked about this. Focus on flawlessly executing your trading process. You can only control how much you lose, how much you make, entries, exits, and managing your risk. So stay disciplined, traders. Stay focused. You can't control the outcome of any individual trade. You can only manage the rest of the trading process. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.